Welcome back to the Profit Target Trading channel. Today, we're going to talk about an essential part of technical analysis, support and resistance levels. I'll go over how to plot them on a chart and how to trade them using the 15-minute time frame, but any time frame can be used. We'll also discuss how to enter trades at these levels using price action signals, so let's get started. Support and resistance levels are areas on a chart where the price of an asset tends to stall or reverse direction. Support is the level at which buying pressure exceeds selling pressure, causing the price to stop falling and possibly bounce back up. Resistance is the level at which selling pressure exceeds buying pressure, causing the price to stop rising and possibly reverse direction. To identify support and resistance levels, we look for areas on the chart where the price has rejected or reversed direction, like so. These areas can be identified using various technical analysis tools, such as trend lines, moving averages, and Fibonacci retracements. When a support level is broken, it can become a new resistance level, and when a resistance level is broken, it can become a new support level. This is because traders who previously bought at the support level may now sell at the resistance level, or traders who previously sold at the resistance level may now buy at the support level. However, it's important to note that not all support and resistance breakouts will result in a reversal in price. Sometimes price may break through a level and continue to move in the same direction as before. This is why it's important to always wait for confirmation before entering a trade. In this video, we'll use Ticker SPY and focus on using trend lines to identify support and resistance levels. To plot support and resistance levels, we'll first identify the most recent swing high and swing low. A swing high is a peak in price that is higher than the prices immediately preceding and following it. A swing low is a valley in price that is lower than the prices immediately preceding and following it. Once we've identified the swing high and swing low, we'll draw a trend line using the horizontal tool, connecting them. This trend line will act as our support or resistance level, depending on whether the price is currently above or below it. We'll then look for additional areas on the chart where the price has stalled or reversed direction multiple times and draw trend lines connecting these areas as well. In the chart below, we can see that the price has been moving in a sideways range between the support level at $408 and the resistance level at $411, which will act as our support and resistance levels. To enter a long position at a support level, we first look for a bounce. Then we'll look for a bullish price action confirmation signal, such as a hammer or bullish engulfing candlestick pattern like in this example, to form at or near the support level. Once both have occurred, we'll enter a long trade at the close of the candle and place a stop loss below the support level. To enter a short position at a resistance level, we look for a rejection. Then we'll look for a bearish price action confirmation signal, such as a shooting star or bearish engulfing pattern like in this example, to form at or near the resistance level. Once both have occurred, we'll enter a short trade at the close of the candle and place a stop loss above the resistance level. You can always play these levels with a 1 breakout or 2 breakout and retest strategy as well. It's important to note that we should only enter trades when we have confirmation from candlestick patterns. Simply touching a support or resistance level does not guarantee a reversal in price, so it's important to wait for confirmation before entering a trade. In conclusion, support and resistance levels are essential parts of technical analysis that can help us identify areas where the price of an asset is likely to stall or reverse direction. By properly plotting support and resistance levels and entering trades using price action signals, we can increase our chances of entering trades at optimal levels with minimal risk. That's it for today's trading video. I hope you found this tutorial helpful. Don't forget to like and subscribe to our channel for more trading education content and follow our socials.